First, the double top gap down reversal combination, followed by an equally large bearish continuation, with the more recent April 3rd gap down keeping price closing below the lower Bollinger Band for almost a whole week. Additional bearish indications from very low values on the Awesome Oscillator and Commodity Channel Index, while price is still under the ALMA indicator. In terms of Fibonacci, we can use the same large retracement from last time, but move the time zone to the duration of the last bullish retracement. Then you could also add a Fibonacci channel focusing on the 0 to 1 to 1.618 sections, along with a spiral over here in a bearish continuation context. Selling could soon be overextended in the short term, leading to some bullish retracements in the near future. Optimistically, price could even close into the 40s for a brief time, but unless it clears over 42, there's still a major bearish advantage that can keep attention around the lower part of the channel and the upper to mid 30s. To learn more about Fibonacci methods, indicators, and chart patterns, please stay tuned and check out the hundreds of tutorials I've already uploaded. Now, as we head further into April between the 3 and 5 time zone lines, the market will be waiting to see if price can keep holding over $5 for at least a minor rebound, seeing as how price has been in the red but with very low volume. Though if stronger selling returns similar to what was seen on March 14th, the drop can continue to accelerate and approximate the path of the 3 spirals.